S&P 500 just gained over 5% in a 3-week period for the first time in 2024. We're going to compare this to the previous occasions and then go all the way back to 2005 to get an idea of what this could mean going forward. So let's get into it. So best 3 weeks of 2024, we can see this very clearly here on this chart using weekly candlesticks going back to the beginning of the year, where the first thing that stands out is that the best 3-week period came after the worst 3-week period right before it. As we know, this is a 6% decline, pretty substantially so. So on the bottom here, we have the 2 panels, 3-week rate of change, and also the 1-week rate of change. And as we know, it was the best week of the year just 3 weeks ago, followed by a very good rally intra-week to close near the highs, which set the stage for last week's near 1.9% advance. We put that all together and we get a 3-week move of 5.1%, clearly the best we've seen so far this year. And so let's look at what happened since the beginning of 2023 as well. Only happened 2 other times, and very similar to this one, both of them began right after corrective market action. We saw it here in March. We know from February to March, market was down 9.3%, and then slingshot higher, starting with those really strong 3 weeks right from the very low, which then morphed into a more consistent uptrend, which we know topped out at the end of July. That's followed by the 11% decline from the high of July to the low of October, which again was then followed by an extremely strong 3-week period, which we know lasted even longer. So we have a 20% move, 28% move. Both of these times also had wide breadth thrusts as well. Didn't quite get that this time, but the point being, as what typically happens when you have big downturns or big down days or weeks even, those are what really leads to the biggest price movement on the other side, right? So not surprisingly, in 2022, we had a lot of that, right? We had almost 131% gains and losses combined, right? And there's basically evenly split along the way. And that's why bear market rallies happen as well. So what you want to see instead of that is really just what happened over the last year, almost a year and a half now, where those big moves to the upside right away don't really stay with us the whole time, but they can shift momentum to the point where then uptrends start to occur. And we know that comes with bullish patterns, so forth and so on. Now, we know this is only, again, not even a year and a half's worth of data. So we have to go back further to get a really good idea of how this could play out. And so let's look at all the 3-week gains of at least 5% since the COVID lows. What we just looked at here, now we go back to 2022. We just kind of alluded to that, where you had a lot more of them, both during the downturn, after the key low, and so forth and so on, and where between 2020, again, after COVID, and 2021, there were a handful of them, and really most of them just occurred within the confines of the uptrend that extended toward the end of the year. And so let's zoom out even further to get a better perspective. And so if we look at all these moves going back to 2005, we can't really look at them all at once in one chart. It would just be too much data on a lot of lines. A bit messy. We want to avoid messy charts at all costs. So in table form, this is how they look. So we looked at the number per year that occurred, not including overlapping instances. So if we had, say, 5 straight weeks of it, we want to look at the first 3 to see what idea of how things continued on from there. And as we can see, a lot of different numbers. Some years had 0, some had close to 5 or 7. So we took the next step and just colored these in a particular way to get an idea of what it means. So as you can see, there are some years in blue, some in red. The ones in blue have years when we had either zero or just one occurrence of a 3-week move of at least 5%, where the years colored in red had at least 4. And so as we can tell, the ones in blue most of the time were uptrends or non-volatile or at least low volatility years. We know 2024 so far has fit that. 2017, of course, was the least volatile advance in market's history based on how much it has pulled back from a high, only getting to 2 or 3% off of its high by extending higher. 2012, the market was unchanged year over year. Then 2005, 2006, 2007, we know was really still the comeback from the internet bubble. And so you had moves of 3%, 13%, and 3%. Now, the one that sticks out here is 2018, because we know that that was bookended by a lot of volatility. But remember how that occurred. So the rally that we had in 2017, started at the end of 16 and went to the first month of 2018. All the time, very low volatility until January 2018, where things really accelerated. We got a lot of 1% moves, and then the vol implosion occurred. So that was the rest of that year. Market came back until the fourth quarter, and especially in December, things really fell apart. So what happened after that? Huge rally in the opposite direction, but really that 3-week period of 5% or more was captured in 2019's action, so forth and so on. And so not surprisingly, 2009, 2011, 2020, 2022 had the most occurrences. So that means you just had the market's ability to snap back after getting hit relatively hard, again, over a 3-week period or longer. And don't want to see a lot of these because that's what the type of environment is going to dictate. And so the bottom line is that a higher frequency of 3-week 5% gains typically happens in volatile markets. A lower frequency typically happens in non-volatile uptrending markets. And so what does it mean for right now? Well, we've had one in 2024. And if the market now regains the type of characteristics that it had before, meaning that we start seeing fewer 1% moves and bullish breakouts start to work again, and fewer whipsaws to have those bullish upside targets hit without having a breakout zone violated, that would mean that the market is again boring or non-volatile. You have to remember what causes big 3-week rallies preceding downturns that are very volatile, right? And so if the market is going to regain those characteristics and going to trend higher, we don't need these. What happens if we do get more of them? Well, think about what happened in 2023. We had 2 corrective periods. Were not easy to sit through, but the market was able to find a bottom, slingshot its way higher at the beginning, have a consistent uptrend. So if we need to do that once or twice more in 2024, but buyers continue to step in, buy the dip, eventually turn this into an environment where bullish breakouts work and leads to another uptrend and new highs, I think we'll all take that. And that's what we'll be looking for over the next few weeks to months. That's it for today. Don't forget to check out these videos and subscribe. Talk to you next time. Thank you.